Wow. Welcome back. Today is Wednesday, 27th of July. I'm really excited to be on this YouTube live stream. And I want to give a big welcome to those of you who are joining us on the live stream. And let me say a hello on the chat, live chat, all right? Hello, everyone. Let's see who is tuning in to the house today, all right? And if you are in the house, I invite you to join me on the live chat. You can connect with us on YouTube, Facebook, LinkedIn, Twitter, you name it, we got it. And big afternoon to Kelvin, I see you there. Wow, very good. I think the rest not used to afternoon timing, and you know, this is kind of a prepare the community. Once I travel to Harvard Business School for my sabbatical, I'll be doing the live stream around 5 p.m. Singapore time, which will be at 5 a.m. Eastern Standard Time. All right, so let's get used to that. And a big welcome to Aku or Roy. Wow, good to see you, Jacqueline. And very happy to see you, Isabella. Thank you very much for joining us. Okay, today we got kind of something really exciting to share with all of you. And thank you for joining us. Here we go. I'm going to jump straight into the big topic for today, and we're going to connect the dots in a very interesting way. All right, it's kind of a prelude to tonight's FOMC minutes, where they will announce the interest rate hikes, which is taking place today at 2 p.m. Eastern Standard Time, which translates to tomorrow morning 2 a.m. Singapore time. Okay, so here we go. We have to go through three very important dots, kind of connect them together, and then we're going to make sense out of it. The first one is this article by Morgan Stanley. Is the end of the bear market near? Morgan Stanley names one indicator to watch closely. Wow, what a big way to start off the afternoon. Now, this indicator that they are talking about, I mean, visually we can understand it. You don't have to really dive deep into it. So let me show you what they are really indicating on this very unique indicator. Okay, so first off, as you know, the big earnings is taking place this week. We have Apple, Alphabet, Microsoft, Meta, McDonald's. Microsoft has just announced the earnings as well. So as investors scramble to call the bottom of the bear market or not, as the case may be, Morgan Stanley says there's one key measure to track as companies report results. That is called the earnings revisions breadth. Wow, I hope you guys learned something today. It's called the earnings revision breadth. Now, this indicator may not be shown on your technical charts. Technical charts, we have about 200 indicators, and the one that we use is on Yahoo Finance. But this one could be their in-house indicator. So I don't even want to teach you how to deploy the indicator. You don't really have to do that, because visually we already understand how the market is reading at this moment. Okay, so let me just go down right here and give you the abstract. Earnings revisions breadth is the difference between analyst upgrades and downgrades in earnings estimates over the total number of estimate changes. Wow. And Morgan Stanley says that within S&P 500, this indicator has dropped sharply throughout this month. Now, how bad is the drop? Right over here. On the whole, the earnings revision breadth for the S&P 500 dropped 14.2% to negative 19.8% as of July 21st, according to Morgan Stanley. This is a major drop, all right? So the conclusion of the method is this. Because of this drop, earnings revision breadth drop, they believe that this is just the first of what is likely to be several disappointing quarters before estimates finally trough through. And as a result, here we go. The initial bounce that we experienced last Friday sparked talk that the bulls were returning to the market, with one analyst flagging a signal that may mean the bear market is over. Okay, so this is the big contention between the bulls and the bears. They were all fighting out. Some call for the doom. There are more bad days ahead. Some call for a turnaround and say, hey, perhaps this is the moment in time the market is start to rally up. Now, we as an investor has to take a position. Where do we stand? You're going to be kind of bombarded with so many different ideas, so many, it's so divisive. There are two camps. One is the bear camp, one is the bull camp. Where should we stand? And that's always how I read the information and the news. We have to take a decision, take one side. Don't sit there and say, oh, I want to, be a hybrid about it. No, no such thing. You have to take one position and contest that position, test it out, let all other indicators influence your thinking process, and that's what we call being thoughtful. All right? So I am reading this article live in front of you. It's not scripted. All of my live stream, you guys should know by now, it's just live on the spot. So I take what they said over there in that paragraph, and I come down right to here. This is not just about interest rates rising and multiples. Earnings are next, and that risk is just starting with second quarter results and guidance, which is the peak earnings at this moment. All right? So you kind of know where Morgan Stanley is heading towards to, that the world is very dark and gloomy, more bad days ahead, but that's what they are saying. All right? So we connected dot number 1. Now I'm going to bring forward dot number 2 to see at the end of connecting 3 dots, where do we stand? All right, so we are not firm up our decision yet, and that's the fun part of it, okay? And I also welcome all of you to really contest the idea and see how we finally arrive perhaps at a commonality, or we are divided in terms of our perspective. Second article I want to show you is Singapore Sovereign Wealth Fund warns of profound uncertainties as inflation rises. And this is, you must know the backdrop of a sovereign wealth fund. They represent the people's wealth. And these people, I call it Singapore wealth, right? And they are always very, very conservative in any of their public statements. But we want to dive deep. How profound is this profound uncertainties? GIC, which is among the world's largest investors, painted a rather bleak picture of the global environment. All right? Years of concerns over deflation have turned into worries of elevated inflation, forcing economic policy makers to reverse stimulus policies. CEO Lim Chow Kiat said in the report. The fund's portfolio recorded an annualized dollar nominal rate of 7% over 20-year period ending March 31st, the fund said in its annual report published on Wednesday. And here we go. Now this 7% is what they call achieve an annualized rolling 20-year real rate of return of 4.2% for the period ending 31st March after stripping away inflation, which accounts about maybe is for them, if you take 7 minus 4.2, that's 2.8%. They are calculating inflation at a rate of 2.8 plus 4.2. That's how you round up with a 7%. But don't forget, it's always over a 20-year period. So in the 20-year period, there will be many, many years that where they done very well. And over the last 1 year, they done very badly. Average out, they are still doing good. Please understand this point, all right? So that's being very strategic in their report. Always divide over 20 years. So they are always kind of over time, when you have a long window duration, you definitely do well. And that is the problem with retail investors. Retail investors, the window very, very small. Perhaps 1 day, 1 month, 1 quarter. Because they say, I got to make ends meet. I got to make money right now, pay my bills tomorrow. They can't stretch it out. And that's why I delve into this part of my book. I call it the art of time squeeze. If we can squeeze time, make money in 1 day, 1 month, 1 quarter, let's do it. If not, we have to release the time to give more time to incubate the returns. But if you look at GIC, their time frame is how long? 20 years to begin with. That's how they get a kind of a 7% return over a 20-year period. All right? So we understand this part, but we have not seen where is the profound challenges. Here we go. At the same time, the clock for climate crisis is ticking, pandemic risk lingers on, and geopolitical conflicts and domestic political Schisms are growing. There are no easy choices for policymakers and business leaders, and in turn, for investors. Now, this is fair, and this is what we have been preaching all night long. All right. So, if you guys are with me on this, this is where I want to bring out again a recollection. What is this recollection? Here we go. Let me bring up my whiteboard, and here we go. So every time you meet up with me, I'm going to preach to you about this. We always start off with inflation. We have a crisis, which is an all-time 40-year high. As a result, they have to bring about interest rate hikes, interest rate hikes, to tamp down the inflation, to bring it down, the monster. And then in the middle of it all, we have the invasion of Ukraine by Russia. Can you believe it? In my generation, I can see a war right now playing out in front of us. While in the middle of this invasion, we saw the isolation of China. Beijing, Shanghai, 加油, right? They are locked down. They couldn't go to do anything at all. Can't even walk out of their neighborhood. And then in the middle of the isolation, what we have is an inverted yield curve. Holy moly! And this yield curve is the strongest inverted yield curve we ever seen in the last 2-3 decades. It is so deep in negative zone right now. 10-year minus 2-year treasury spread, we got a negative number. That's a very strong indicator for upcoming recession. And while we are going through the inverted yield curve, you got the cowboys of the three arrows and the Luna and the Terra running around. And right now, Interpol is on the hunt for them. We call it the implosion of the cryptos market. All right. So all the leverage guys, all the back actors will be killed right now. People are after their blood. So you've gone through 1, 2, 3, 4, 5, 6. We got a lot of problems to deal with at this moment. As a result, what GIC is essentially saying that, hey, policymakers really got a tough time ahead. They got to figure out how do you handle so much mess happening at the same instant of time. This is not even sequential. This is right now simultaneous concurrent attack. And what other I's do you have? I mean, alphabet I myself and me. That's it. Okay? There are already 6 eyes I painted in front of you. It's really dark and gloomy, but there are many more eyes I will reveal over time. I don't want to overwhelm you guys, all right? This is being very thoughtful about it. So let me come back to that GIC article, and we say, okay, I understand your concerns, Mr. GIC. Let's dive into your profoundness. Here we go. Dun, 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 dun. Given the uncertainties, we have doubled down on our core investment principles. Diversify our portfolio, take the long term, and emphasize preparing rather than predicting. This is such a beautiful statement by Lim Chow Kit, CEO of GIC. There are 3 parts to this paragraph. And it's time we take the wisdom from the guy who manages Singapore's wealth. Diversify our portfolio. And you read this, you kind of thinking, okay, teacher, how do I diversify my portfolio? Now, there are only 11 sectors in the marketplace, by the way. And for me, I'm looking for concentrated bets right now by the insiders. People like Warren Buffett. Later I'll show you Katie Woods. She just bought more than $50 million last night. Holy mama, all right? Very, very concentrated bets. Take the long-term view. Now, how long is long? The question, you want to release the time squeeze, how long is long? Now, typically, we look at the election cycles, all right? 2024 is the next presidential election of the United States of America. That is a low-hanging fruit to 2024. But for my long-term view, for those of you who are trained by me, I stretch all the way to 2032. And that is when my son becomes the age of 25 years old. 10 years from now. I'm pushing it to 10 years. And I'm giving you all so many affirmation that 10 years from now, it will birth the instrument that will create the first generation of millionaires among those born in Generation Z, the Zoomer generation. That's where my three boys belong to, Generation Z. And by the time my son is 25 years old, that instrument will surface. And you will know it. You will seize upon it like hell, and you'll ride the wave to become a millionaire in the shortest time. And emphasize preparing rather than predicting. So what do I actually prepare you as my students, and those of you who are watching us public for the first time? I'm preparing you to master three very important instruments in the marketplace that comprises these three instruments combined together. We call it wealth trilogy. They comprise of 50 years of wisdom. From the first year of the baby boomer to the last year of the millennial. That's 50 years of wisdom with three instruments that created millionaires and billionaires out of these three generations. That's what we are talking about. Preparing for the fourth instrument that will help Generation Z to create the first batch of millionaires among them. That's called preparation. But you can only prepare provided you understand stocks, options, and cryptos. This must be the foundational block. All right, so this paragraph really resonated with my thinking, and kind of I see, oh my God, this is like deja vu. But credit goes to Lim Chow Kiat, who can articulate so well. But my job is to simplify his words into actionable steps. So as a result, we say, okay, I hear you, Mr. GIC, but please show me where is your profoundness. All right, because we started off with this very scary word, holy moly, profound uncertainties, right? Which I broken it down into the 6 alphabet I's, and then ended off with these words of wisdom from him. And of course, we come to the very last part. Here we go. Amid the global shift to low carbon economy, the fund announced it has set up a dedicated office focusing on sustainability to ramp up focus on that front, and the new office will deepen research into critical issues and integrate sustainability further into all of its investment and corporate processes, GIC said as part of the release of its annual report. Let me tell you what they've done with this idea of what they call low carbon economy. Collectively, GIC and Temasek have invested into things related to the EV market, electric vehicle. We saw that investment, we kind of traded together with them, and really, they really stuck by what they say. They walk their talk. That's what I love about the data side of things, all right? So for those of you interested to know the Temasek portfolio, the GIC portfolio, here at Spiking, we as the fintech, we know exactly what they buy, sell every quarter. And in fact, there are real-time transactions that we also track a few milliseconds behind the real time, all right? So please kind of check us out at spiking.com. So we connected 2 dots. Morgan Stanley, we connected to GIC, and now we're going to connect to the final dot. So far from the two of them, kind of dark and gloomy, oh my gosh, but perhaps the third dot will give us the enlightenment that we need. Here we go. Microsoft cost-saving investments made up for its weaker than expected quarter. But what I truly want to share with you is right over here. Let's take a look at the stock chart of Microsoft. This is Microsoft for you. Now they did the earnings this morning, Singapore time, announced the earnings. And I'm going to show you what happened after they announced the earnings. I'm going to click on the 5-day. Look at this spike. The stock price has spiked from 245, boom, 267. This is the reality of the market. for all the doom and gloom that they are preaching about. Because it's so doom and gloom right now, everybody is looking for a good piece of positive news. And if they can kind of clutch their hands around it, this is the reaction of the stock price. Tonight, the stock price will open up, spike up 3.99%. Let's round it up. That's equivalent to 4% spike up the stock price. If we are deploying options, that's 20 to 40% spiking up on the options premium. This is the reality of the market. So I put to you right now a few things to think about. Yes, of course, they have every right to say it's a doom and gloom. This is their choice. But I'm going to end up with the final sharing, and this will kind of drive you really crazy. Here we go. I hope you guys love this very much. By the way, before I share this with you, I want to see the response of our people live stream right now, just to make sure you guys are doing fine. All right, so let me go back to my live chat. How are you today? Can I have your response on the live chat? Please tell me, how are you today? Holy moly, here we go. Anybody in the house? So happy to see that Jacqueline is feeling good. How about the rest? How are you feeling today? And you know, I want to kind of share with you guys. I mean, the rest is coming in. Kelvin eating poke right now. Yesterday I had poke, now you went to buy poke. Okay, I should introduce some more new snacks to you, alright? And how about Isabella, rise and shine. You know, this morning I started my day at 7 a.m. and then my first meeting was at 9 a.m. at Rifles Place. Very good meeting. I'm so blessed to know very learned people, learned seniors who are willing to mentor me, and I'm so blessed. So 9 o'clock was my first meeting, then 11 o'clock was my Zoom meeting, and then 2 p.m. was my AGM. We just finished our AGM just now. And right now 4 o'clock is my live stream, and tonight 7 o'clock will be my Chinese class that I'll be teaching until 12 midnight. And then I'm not sleeping because I have to stay awake until 3 a.m. to listen to Fed Chairman Jerome Powell, what he wants to talk about the economy. So that's my day for today. All right, kind of very productive, and just to impress you, not to impress upon you on the fact that this is the moment in time we have to double down on our activities. And I just feel very blessed. I got many good people surrounding me, good students, good mentors, and most importantly, I have a great God. All right, so let's come back to the final dot, and this will blow your mind apart. Oh my gosh. For all the gloom and doom that people are talking about, really, is the market so bad that nobody dares to touch the market? So I want to show you something that Spiking sent to me this morning at 8:04 a.m. All right, 8:04 a.m. So this is our robot instructing to me, hey, this is Katie Wood notification for 26 July, this morning, all right? For the transaction yesterday, they notified to me Singapore time today, all right? So every time she transacts something, we want to know what she's buying. Here we go. Can you believe it? When Shopify crashed last night, she went in to buy $55.7 million. And then she also went in to buy Roku, $46.7 million. Right? So let's just take a look at Shopify and Roku and see whether you can handle the truth or not, right? Because the truth, sometimes you just can't handle the truth. So let me go to Shopify right now. and ask how many of you can handle the truth. All right, so let's go to SHOP, boom, and here we go. This is Shopify for you. All right, and last night they spiked down, 14% spike down. Look up there, mama. 14% drop, which is represented by this candle right over here, and kind of trading at $30. KTU went in to snap up $50 million worth of Shopify shares. Would you dare to do it? Because it's very related to what I'm teaching you today, and that is, you have Morgan Stanley, you have a GIC telling the whole world the market is profound uncertainty, profound this and profound that, whatever profound they want to call it, all right? And if you look at the chart right now, from pandemic days, back then when it dropped, it has dropped to the same level of back then during the pandemic, right here, all right? I kind of move the square right over here. It's as if Shopify has not done any business at all. Look at it for yourself. Please slow down and let me drink my chrysanthemum tea. Wow, marvelous. And ask yourself, do you mean that since March 2020 until today, Shopify got nothing to show? That the stock price has to go back to the $30 back then. That's how bad the doom and gloom is kind of floating all around us. That's how bad it is. It's a perception problem. It's not a fundamental problem. Fundamentally, Shopify every year just keep growing leaps by bounds. They got more merchants on board. They got more people shopping through Shopify, where right now online transaction is de-thing, not paying with real fiat money, but paying online. And you mean to say the stock price is reflecting this reality? So if you have the guts, you go in, just like Katie would, snap it up at $30. But I leave that to your thinking, all right? And we're going to look at one more company, another, woohoo, the mama company, Roku. All right? I didn't change anything, same approach, and this time around I'm going to draw a rectangular box. This is the rectangular box. Back then, it dropped so low, and I just replicate the box right over here. Do you mean that Roku, the business, is so bad right now that is exactly the same spot where it fell back then in March 2020? Trading at $80 today, and KTU is going in to snap up like mad, all right? But I think there's more room for it to drop, because if I move the crosshair, it has the ability to drop to $60. So let me move this up here so that we can really see clearly, all right? Where's the $60? This is the range, I call it the $80 to $60 range. Yes, the potential to drop another $20, because that was how low it was March 2020. Question is, do you dare to buy? So we connected dot 1, dot 2, dot 3, dot 4, and we end off with this very cute guy right here, $55.7 million, mama right here. Roku, $46.7 million. I never seen her buy so many things. This is the $100 million transaction I've not seen in the last 2 to 3 weeks. This is a fresh killer moment. And then you go down. I mean, I exited from our DNA with a 6.25% profit. While I sold it away, she went in to buy 7.7 million last night. I was selling, she was buying, damn it. And then you go down. This is the one day that she surpassed $100 million purchase. 138.2 million to be exact. So, ladies and gentlemen, what's your thoughts? Today is a really, really exciting day, and you know, I'll be firing a trade right after this to kind of consolidate my position. And tonight, you know, most importantly, I will stay up until about 3 a.m. in the morning to watch Fed Chair Jerome Powell talk about maybe 75 basis or 100 basis points interest rate hike. And then I'll start firing off trades like crazy, right? Now, if you like to know, hey teacher, what exactly are you talking about when you keep talking about firing off trades, then you got to take a look at this, all right? Here we go. Dong. So right in front of you, we got 3 QR codes. You all can see 3 QR codes, all right? If you are interested in knowing what are the trades I'm firing off daily, you can go and take out your camera, scan on the center one, the green box. That's called the insider trading daily trades, all right? I'll do the analysis, I'll connect the dots, and then I'll fire off the trades. And if you are part of our Don't Stop Believing, we call it Don't Stop Believing, inspired by the song by Journey, right? Then, you know, we'll send you a WhatsApp notification every time I fire off a trade. And that's the reason why it's in green box. Now, for those of you who say, hey teacher, I really enjoy the way you connect the dots, then I invite you to join the red box. Join the 7 days challenge. Because the 7 days challenge, you will straight away paper trade in the marketplace. I'm going to give you $100,000. You're going to paper trade using the data, using our very proprietary strategy and method. And you see for yourself whether this is something you can do for a lifetime. And finally, the blue box on the right, some of you say, I want to learn even more deeper knowledge about what you do as spiking. I encourage you to subscribe to our e-learning. All of my past videos that I've done and recorded, you can watch them at your own pace and comfort, and you know, dive into the individual topics that I'm covering in the e-learning, all right? So these are the 3 ways that you can get acquainted with our data, get acquainted with our teaching, and most importantly, you need to take action. So I welcome you on board if you're interested, all right? So after I end off the live stream, I'm going to put back the QR code later on. You can take a look at them. So tonight, what's the homework? Tonight, 7 p.m. sharp, I'll be teaching our Chinese class. Wow, 共同富裕，财富三部曲. Wow, this is a very, very exciting class. We have an emerging class of self-directed traders and investors among the Chinese communities. Our students come from Taiwan, Hong Kong, mainland China, as well as Chinese communities in different cities of the world, right? And I will teach completely in Mandarin. And of course, our software is also delivered in simplified Chinese as well as traditional Chinese. I'll be teaching the class until 12 midnight. And then the 2 hours I have a break. I'll wait for Jerome Powell to announce the interest rate hike. It will be published at 2 p.m. Eastern Standard Time, which is 2 a.m. Singapore time. And then we wait another hour, 3 p.m. Eastern Standard Time, which is 3 a.m. Singapore time. Jerome Powell will address the nation, live telecast. So this is the life of a trader. Really, really exciting. So many things to do. And then tomorrow, I got a whole series of meetings lined up for me again. I hope you enjoy this session with me. Please remember to subscribe. Click on the notification bell each time we go live. You're going to be alerted about it. All right. And thank you so much for joining me today. Thank you, and may God bless you. Goodbye, everybody.